now, we're looking at an S&P 500 nearing 4,900. What brings us another 6 or 7% higher?
Thanks for having me on the show, Katie. I've got to say that where we are right now, we think it's more sampling from economic data as well as news that we're getting from Q4 earnings season that suggests resilience remains in the economy, even as the Fed has success in placing inflation in check, which would likely imply that the Fed will remain on hold, and allowing resilience to continue forward, and the market likely to trend higher as bears continue to capitulate.
Well, John, this is the relationship that I'm always interested in, of course, what the Fed is doing and what the stock market is doing. And when you think about 5,200 for the S&P 500, how dependent is your call on what the Fed actually does?
I think quite a bit in the sense that we have been all along, we have really regarded very different from many of our competitors. We've regarded as the Fed as really being remarkably sensitive this rate hike cycle as to the effects of its practicing its mandate on the economy and making sure that enough resilience remains so that they don't push this economy into a recession. And thus far, they've succeeded. Last I looked, the hike cycle started in March of 2022. So we're coming up to a second anniversary. Knocking on wood, so far so good. That's not to say that we could see more slowing in effect as the Fed remains on pause versus cutting rates. But we think that the Fed will likely, when it does cut, if it keeps doing what it's doing and has positive effect on the markets and the economy, we think it may not actually begin cutting rates until the second half of the year. And then not because it's pushing the economy into a recession, but rather arriving at a moment where enough is enough, and perhaps judging that the effects of any lag that it has in its policy from the pause would indicate it would be okay to give the market and the consumer overall and business the ability to have at least one cut this year, maybe two.